Hi everyone, thank you all so much for stopping by and checking out this sort of unconventional budget video. This is where I share with you guys how we are implementing the velocity banking strategy to pay off our last remaining debt aside from our mortgage that has interest attached to it. And the whole goal with the velocity banking strategy is to save money on interest. Once you start facing your debt, next seeing how much money you are paying to the lender to keep that relationship with them, it's like this total mind shift that happens. And that is what had happened with us. And that's where I knew that I had to start thinking outside of the box that the banks and the government want us to think within to get out of this cycle of paying interest and making the lender more money and me being a slave to the debt. So that's where I stumbled upon this velocity banking strategy. I have an entire series showing you how we implemented the strategy. If you search YouTube, there's a lot of videos that show you how to implement the strategy with different types of loans. You can even use credit cards. We're using our home equity line of credit. And essentially what you do is you take a two-way simple interest loan or line of credit and use that to pay down one-way amortized interest loans. That is in essence what velocity banking is. We are using our HELOC and it accrues interest based on an average daily balance. That's our two-way simple interest line of credit that we're using. And the loan that I'm currently using it on is my student loan. There was a refinance in June of 2018 for $68,800. It was refinanced for 4.75% and my set minimum monthly payment was $543.40 every month. It's not been a part of the CARES Act, of any of the loan forgiveness that the government's been doing lately. So I've still been accruing interest, still been having to make my minimum monthly payment. And we've come to a point with this strategy to where I could pretty much just kick it into hyperspace and terminate that relationship with that lender and no longer pay them money and interest and just have more control over the interest that I'm paying with everything being housed within our home equity line of credit now. But first what I need to do is close out January and we house all of our accounts. I still have a sinking funds that serves a sinking fund purpose. I have if you want to look through my library, my budget playlist, I show you our sinking funds, how I close those out, but that money's housed within the HELOC. And then I have two savings accounts that serve that same purpose. And then my checking account, I try to transfer over as much money as I can into the HELOC to hold that principal balance down. The amount of money that my bank sees as money they can charge interest on, keep that as low as possible for as many days as possible within the billing cycle to maximize my interest savings. So flip this over. This is my transaction log that I have and how I track the flow of money. Everything's color coded. This is just where I put together my numbers to prepare for this video. And yeah, so I'll get you guys zoomed in and we'll just hop right to it. All right, so starting first, I'm gonna write everything that was added in green. We had transferred in $651.43 for checking. Sinking funds had $4,094.33 contributed to it. Savings 1 had its usual $50, and this is building so that I can make different gold and silver purchases. I buy from SD Bullion. I've purchased twice from them now and have had a great experience, but buying with $50 every month, it's been kind of difficult. So I'm just letting that build up and then make whatever purchases I want. Next, Savings 2 had its usual contribution of $300. And then the principal payment we were able to make, this is more of a reflection of what happened in December, but we were able to add $2,916.29 to pay down the original $20,000 that I had taken from the HELOC in August to chunk down that student loan. It started at $68,000, like I said, in June of 2018. It is now down to $39,000. Then what we had pulled out of these accounts for checking, I had ended up pulling out $7,360.62. And sinking funds, I pulled out $651.43. Nothing had come out of these. So total, these will total the same because as you can see, the bank has not had anything to charge me interest on because these accounts have been doing such a great job at holding that principal balance down. So even though I still owe the bank about $5,800 when you add these two together, they're not seeing that $5,800 to charge me interest on. They are seeing nothing. So $8,012.05. And then this again is $8,012.05. With these accounts have built up enough and I paid down enough on the principal to where I haven't had to use much of my checking. So I actually don't have anything. Checking is technically considered negative, but it's $5,275.34. So that's just an extra $5,000 that's been sitting in my standard checking account, not really working hard at anything besides just paying bills. Then my sinking funds is at $7,325.36. My savings 1 is now at $1,050. Savings 2 is at $2,700. And the principal total paid on that $20,000 is $14,199.98 that we've been able to pay since August. And this all adds up to $20,000. So my HELOC starting balance was technically at 0, and the interest for the month has been 0. Interest overall has been $83.44, and then my HELOC ending balance is still at 0. So this had kind of taken a lot of a mind shift for me because I think once you become aware, kind of you have this awakening with your finances, especially once you start on a debt-free journey and start educating yourself on how finances really work, there's kind of like this aha moment. And I was like, my money, this cash currency that we have, these paper dollars, these coins, it's just what the government tells us that money is worth. It's buying power. It's not actually attached to any gold or silver, So that's where I was kind of like this, and I've been a cashless budgeter, so I've been comfortable with not having cash. But that's where I was like, I just need to track these numbers, and then the money that I have can work harder for me. So this is kind of where we were at ending in January. I had still owed, I closed out my paycheck 3 budget yesterday, and that was our January paycheck. But this is where I showed you guys what we ended up doing. So I had still owed $39,287.78 on this last student loan. And our HELOC, I'd owed like $5,800. Actually, I need to write that down. It was at $5,800.02. With some money, our cash flow that I'd been building up in a sinking fund, and with some of our car sinking fund, these two together, and what I'd had available with my HELOC, I'd paid this off. And that left this with an even $42,000 now owing on our HELOC. But we had gone from, let me actually write these numbers down for you guys, from $45,479.42 that we owed to now $42,391.62. And the minimum monthly payment from this student loan, and we are actually paying off 2 cell phones this month. That's going to be added together and now be the new set minimum monthly payment for the HELOC every month, regardless of what the bank tells me my minimum monthly payment is on it. It's going to be about $610. That is going to be that new set minimum monthly payment. And then whatever cash flow that we have is going to go towards principal, towards paying this down as well. So now setting up my new sheet here for February, my numbers are going to be looking different. So let me just write down February. Okay, so what our new numbers are, and I've already been making some transfers into here, but I'm not going to be able to transcribe everything because of the checking. This new checking ending amount is actually now, let me make sure I get the right pen color, is actually now $9,000. And the sinking funds, that's still going to be the same. It's $7,325.36. And I just like this, these numbers are fluid. Obviously, there's money that's flowing back and forth as I have to pay bills that are due with it that you can't pay with a credit card, things like that. Let me see, and then I need to write this. This is going to be my principal, but the principal is now starting at 0 because we just kind of reset this amount. So what this comes to now is $20,075.36. So then if you take that away from the $42,000 that I took out, now new, it is, the bank is seeing $21,924.64 to charge. So we are kind of resetting this new velocity accounts tracker, but that's all I have left now is just my HELOC, which is my student loan, and cell phones that are 0% interest that I'm just paying them off per the agreement that I have with the cell phone company. But that is the big moves that we had made in January moving into February, what this is going to look like moving forward. And now we're just going to focus on paying this down and tracking our new principal and our new numbers. I'm going to move you guys over to my Excel spreadsheet. That's going to be looking a lot different, but I'm excited to see how much interest we're able to save as we move through paying off this loan. And then hopefully at the end of this year, we'll be able to start using this strategy on our mortgage, which that's where we're going to see some big moves and the real power of this strategy. But yes, let me switch you guys over and we'll wrap this video up. Okay everyone, so here we are at this Excel spreadsheet that I put together, and this was to pretty much monitor the interest savings with this strategy, because I of course was very skeptical at first. This is such an unconventional strategy. I wanted to track that there was truly interest savings. So up here at the top, this yellow snowball table is my prediction had I followed the standard snowball method and used this snowball payment over here. And then there's this interest paid. And then down here is the velocity banking strategy. And I enter the interest that I paid for that month. So for January, and the interest paid for the actual student loan. So these are actual numbers. These are just hypothetical. And then over here on the far right is the difference. So the actual interest savings. And then this is not complete. I actually have not expanded these tables out until the completion of the loan. So that's something I'm going to need to work on. But even without tracking me paying off this loan totally, I have a potential interest savings of about $680. So now what we're going to do is plug in some real numbers. We'll start first over here with how much we were actually able to pay on the loan. Let me see. So this is for January. And that comes from our principal payment. And that was $2,916.29. Okay. And you can see these, there's equations built in, so the numbers automatically shift. Next, we'll come down here for our interest paid in January on the HELOC, and that was 0, as we know. And then we can update our actual interest paid on our student loan, and I have underestimated this, which makes me think that up here I would really be paying more money as well, that these are underestimates. So my true interest savings is likely more, but I do have proof, even with the underestimation, that there's interest savings. And that's really all I was looking for. But what I got charged in interest for January was $158.43. Okay, so that had updated the interest savings over here. So if you add all these together, that will tell you our current total. But moving into February, this is going to be reset to 0, and then I'll just be tracking my HELOC percent interest, which is obviously going to be a lot more, but it should still be less than the $154 that they would have been charging me had I stuck with that lender. But that is going to wrap up this video, you guys. If you had hung around for this long, thank you so much. If nothing else, I hope you found this interesting and at least provided a little educational nugget about some alternative ways to pay off debt and just some unconventional ways that you can attack your debt, especially if you're wanting to save money on interest. But I hope you all have a great week. This will be my last video for this week. I will see you guys next week on Friday when I post my week 1 check-in for paycheck number 1 for February. Bye guys.